Let's talk some commodities with Alan Luckman. He's a chief market strategist at BullseyeOption.com. Down at the CBOE where things are quiet because VIX is sub 14 and bulls rule the day, right, Alan?
It's never quiet. There's always money to be made. And yeah, the VIX still has a little bit of work to do to make new lows, whereas the S&P continues to crank and be super strong.
The drop that we've seen in vols come with the higher stock trade. You've spent a lot of time with us buying the laggards of the market, looking for them to join in. Today you're more on the commodity front.
Right. Well, I think the theme is, and you guys devoted a whole segment and more to it, is the dollar dive. The dollar below 100 is very significant. If you remember, it coincided last week with the S&P getting above 4,500. So dollar dive means stock drive, and especially the resource stocks, which are denominated in dollars, that they benefit from that.
So to see the commodities soften overnight with some China news, there's some hesitation in that part of the trade. But should we not, worry if they're just going to pump more stimulus in?
Right. In the big picture, I think the dollar decline is very positive. We had traded between 105 and 100 for more than 6 months, so that target's 95 on the downside. And then there's not any support till 90. So if you look at the interest rate curve here and the predictions, there's one more hike, 90% chance there's going to be one more hike. And then it pretty much looks like that's kind of the end of things. We'll see. But U.S. Steel is a stock that's been trading sideways for more than a year, between 20 and 30. We're at that 25 midpoint. A pop above that 25 midpoint sends it to the range top of 30. And 30 is also the midpoint magnet of the last 2.5 years, where it's been trading between 20 and 40. So there's a lot to like technically for U.S. Steel right here.
Okay. X. Little change on the day, and with the exception of a big up and down at the beginning of last year, the stock's been pretty stuck between like 22 and $30 max.
Right. And if you look at it, it's been down 3% in 2023 versus the S&P up 17%. So it has some catch up to do. And I like this group. I like the risk reward. The way to play for me is I'm looking at an October 20 call. Again, 20 is that super support point in that low. And it's the low over the last, 3, 4, 5 years as well. So it gives you a good value point. The PE on this stock is 3. So it's an inexpensive stock. The 20 calls trading for about 5 right now. It's got 3 months of time and 80 delta. And if we simply get back to that 30 level, which is the midpoint for the last 2.5 years, then that option gains 100%.
So moving more into the commodity industrial camp, away from some of the tech heavier trades you were more likely to do 3-4 months ago. Is this Alan Luckman rotation?
Well, it's timing. I mean, right now a lot of those tech stocks have performed, and to talk about it, there were doubters. There were a lot of doubters that tech would make the comeback. There were a lot of doubters, and I'm not naming names, but we talked about one, ARKK, or I don't even remember what the exact symbol is, but the ARK Innovation Fund. Yeah, and nobody wanted that. And it was just, at some point it was bad enough to buy, and that's a great example that we put a position on in that and made more than 100% on that complete turnaround. When you looked at that group, that segment, that it just looked like, the risk reward payoff was there. And that has happened in a lot of tech stocks. Now, I like the risk reward payoff in the more resource stocks, energy stocks, metal stocks, mining stocks. I think these are all set up to see some money, like you just said, rotate as they offer a better value compared to a lot of other stocks that have already made big moves.
All right, there's the trade. There's the old trade for ARK, and now for X, the Luckman rotation to cyclicals. Thank you very much, Alan. Appreciate it.
Thank you.
Chief market strategist at BullseyeOption.com. Looking for some upside with the in-the-money calls in U.S. Steel. Let's get industrial when we come back. A nice transition into the trains, rails, and a few